welcome to Crypto Weeklies. My name is Josh, and this is the second video on this YouTube channel. This YouTube channel is focused on technical analysis for cryptocurrencies and stocks. So on this second YouTube video, I would like to focus on logarithmic regression and use Bitcoin USD pair to explain what logarithmic regression means and how it applies to Bitcoins during its market cycles using three different regression bands. So as you can see on the screen, there are three bands. The first band is in red, the second band is in white, and the shaded area is in blue, and the third regression band is in green. So first of all, I would like to explain what logarithmic regression means in a simple words. So logarithmic regression means for any asset, the rapid growth happens during the initial phases, as you can see from this slope, and it slowly flattens and as the asset matures. So you would expect to see it flatten sometime in the next decade or so. So with this in mind, logarithmic regression band, the first logarithmic regression band is color coded in red, and that coincides with overvalued phase of Bitcoin market. The second one is in white, the white line coincides with the fair value of Bitcoin, and the third one in green coincides with undervaluation of Bitcoin. So let's take an example of Bitcoin's entry and exit from the red band. So ever since Bitcoin was tracked, the first time it went to this red band of overvaluation was during the first hypes of Bitcoin, or the first bullish phase of Bitcoin in 2013 or April of 2013, and it exited that band again in June of 2013. So about 3 months it spent in this territory. Then again it went in this band again in October of 2013, and it exited in September of 2014. So about 9 months, not 9 months, 11 months, from October of 2013 to September of 2014. So 11 plus 3, 14 months in this cycle. In the second cycle, because we didn't have two peaks or two extensions to this overvaluation phase, you can see there was only one bullish run. So it spent from October of 2017 till almost July of 2018. So 10 plus 7 is 9 months in this overvaluation territory, and again about like 1 month, so you can say 10 months during the 2019 phase which followed this bear market. So, and in this current cycle, as there were like two peaks, you can see Bitcoin spent almost from December of 2020 till May of 2022. So the entire 2021, which is 12 months, and again 5 months, so 17 months, which is pretty similar to the first cycle, plus 4 months. So you can see that Bitcoin has spent 17 months in this red band, and after, what happens after Bitcoin comes down from this overvaluation regression band to fair regression band, the fair value regression band. You can say since October of 2022, Bitcoin has entered this fair value territory. So you can, the similar example that we have is once in March of 2015 and one time in November of 2018. So we have two examples, and Bitcoin can follow either of those two paths or carve its new path for the third time, because the fractals are not the same every single time. They follow their own pattern based on several factors. But what is pretty common is that once Bitcoin moves from this overvaluation territory, it before it goes back up and creates new all-time highs, it spends considerable amount of time in this either fair value territory, or it touches the undervalued territory. And I have purposefully not overfitted these territories, because as you can see, these regression bands are slowly but surely converging to each other. So you might see that in cycle 1 Bitcoin didn't touch the green band, but it came pretty close to the green band. But in cycle 2, during the March crash of 2020, it touched the green band, regression band, once. Maybe in upcoming cycle, as I mentioned, as logarithmic regressions has this phenomena of having rapid acceleration at or growth at the first initial phases, while it slows down as the asset matures. We might see a cycle where Bitcoin spends considerable amount of time in this green band before either coming back out of it and touching the white fair value area, or barely touching the red regression band. So just something to keep in mind. And another practical utility of this regression band exercise is that for investors who might consider investing in Bitcoin, this regression analysis would inform the investor, saying that at this point in time Bitcoin is in this phase. Either it is going to looking back at the historical data, it is either going to spend considerable amount of time in this fair value or undervalued territory, or it may as you can see from this cycle, or it may as in the second cycle it may barely spend like 5 months from December of 2018 till April of 2019, and go back and visit the red overvaluation regression band, and again come back down and again hover around this fair value, and then break to the upside and go back and visit the red regression band and spend some time over there meaningfully to be referred as a bull market for Bitcoin. So this is again another utility for this red regression band, as well as the fair value of Bitcoin regression band. And as this asset class matures, and these regression bands kind of converge together, there might be a case in future where there would be only two regression bands, or there would be the regression bands would have smaller width. So that is something that may happen in the coming days. So stay tuned for that change in the regression equation. As well as just the last point that I would like to make is as similar to Bitcoin spending considerable time in the red regression area, Bitcoin till these first three market cycles, Bitcoin might spend considerable time in the green regression band as well. And at times, as we see that Bitcoin has peaked outside the overvaluation regression band, we might see Bitcoin go down and or go sideways and move out of the undervalued regression band as well, and make a peak below or a trough below this green band as well. So that is also something to consider. So thank you for listening to this discussion on logarithmic regression. Just concluding thoughts is, as this logarithmic regression is at a weekly level, and in combination with these Heikin-Ashi candles and the general market sentiment, this type of analysis is more informative for a potential investor. And just another disclaimer that I would like to share is that Such type of technical analysis is just for informational purposes, and it's not to be construed as any type of financial advice. Thank you for listening to me today, and I hope you have a wonderful rest of the day. uh, and if you like our content, please do subscribe to our channel. The channel's name is Crypto Weeklies. You can either subscribe or find it using the search tool and entering the keyword Crypto Weeklies. And I look forward to making such similar videos, and I look forward to seeing you the next time. Thank you, and have a very nice rest of Sunday. Bye bye.